Hello, what's up guys? Welcome to another video. In today's video I'm gonna explain to you LRLR. I don't know if you heard about it, but it's an ICT concept. So I'm gonna explain to you how it works and how I used it to take a trade today that made me a 2.5 RR. Know what I'm saying? So let's get started. So first of all, what those LRLR mean? So LRLR stands for low resistance liquidity run. So let me explain to you. So what's a low resistance liquidity run? So imagine this is the market, right? And we have equal highs here. We know price is gonna go and run this liquidity. This is our target, right? So if the market is gonna go run this liquidity, there are two ways. First of all, there's a high resistance liquidity run. This one is basically when the market runs it with difficulty, like high resistance, like it moves slow and there's a lot of retracements and pullbacks and turtle soups, right? I'm pretty sure you know what I'm talking about if you have a good market experience. It runs it but with high resistance. And there's a low resistance liquidity run. It runs it smoothly, boom. Maybe like fast, no resistance, little to no resistance, right? So low resistance liquidity run is a liquidity that will be run by low resistance like this. So basically targets like this that will be run like this, smooth and fast. Example, do you see this liquidity? Low resistance liquidity run. Look at this. This is a big ass move. I'm showing the 1 minute in a second, right? Look at this, So this is the moves that you want to catch, like no drawdown, like fast GP and stuff. So let me explain to you further. So when we say low resistance liquidity run in ICT, we're likely referring to the trend line liquidity. So pretty much we see a bullish market, high, lower, lower low, high, lower low, higher, lower low. There's some kind of trend line liquidity built up here. Like the SMC traders do something like this, and so pretty much this type of liquidity tends to be run with low resistance, like boom, boom, boom. So this you could use this as a target. You could also use it as a bias. For example, you don't know if the market is gonna go up or gonna go down. You open the chart, you see the price building this liquidity. You see, oh, there's a possibility that the market will run this, so I should maybe look for a short. This is exactly what happened today on the nasdaq. So Monday, market's been going up like crazy, like all week last week. As you can see, last week the market, this is Monday, Tuesday, Wednesday, Thursday, I think this is Monday, so like all week was bullish. So Monday, I don't really know the market is gonna go up or down. I wanted the market to go down before the market opened, so I was looking for a short to be. I wanted a short, but I'll take anything the market gives. So pretty much 7:30, I was watching the chart somewhere here, and I see we have a new week opening gap. As you can see, Friday closed here, Monday opens here, right? Close, open. There are no trades here, right? So we should look to rebalance this inefficiency, right? And we have what? We have a high here. This is the previous week's high, right? Because I told you the market's been rallying up like all week. So this is the high. So here's what I've seen. The market went up since Asia, started going up, leaving this low resistance liquidity. As you can see, a trend line. So forget about this part. This is the part where I took the trade. This is what I was seeing. I'm trying to explain to you the narrative, right? So low intact. This low is not taken, so there's still sell side liquidity. Again, sell side liquidity, equal lows. Sell side liquidity, sell side liquidity. So there's a bunch of sell side liquidity pulls. Like look at this. Sell side, equal lows, equal lows, equal lows, right? Equal lows. So there's a target, or there's some kind of liquidity for the market to reach, right? There's a kind of uh, like something to take, right? And also we have the another equal lows here. So there's like a bunch of liquidity. If you don't understand liquidity, listen, go to my channel and watch this video. I promise you, if you watch this video, you'll be a beast with liquidity, right? So check this out. So anyway, so comes 9:30, market opens up, manipulates these, you know, first presented fair value gap. Again, I've made a video on the first presented fair value gap. I promise you I'm giving you the sauce, no bullshit, no course selling, nothing. If you have any questions, by the way, message me on Instagram. So this is the video. You'll understand the first presented fair value gap too. Price inverse the first presented fair value gap, takes the previous weekly high, you know, and again a high. On top of the high we have what? Buy side liquidity, and we have here what? Sell side liquidity. So the market does the order pairing, you know, boom, manipulation, checks buy side, and people are buying from the people who are buying here. So imagine you took a short here, right? You took a short, right? So your stop loss will be a buy order, like buy, right? Like you're gonna buy back what you have sold at a loss if the market goes down, right? So people are selling here, smart money, quote unquote, are selling to these buyers, right? And what they're selling, they have to buy back, right? So where are the buyers? You know, people who bought here, right? They have a sell order here, right? So I know this is confusing, but just watch it, you know. So buying from these and selling to these, and look how the market delivered it. Boom, crazy displacement, you know, crazy displacement towards this low resistance liquidity run, you know, low resistance liquidity run. Again, crazy move. You can just invert this. I mean, this is pretty much how it happened, you know. Like, we just, I don't know how to explain, you know. We just ran it with low resistance. Look, no pullbacks, nothing. Boom, target was hit. First presented fair value gap was inverted, right? So these targets remain, and as I said on the daily time frame, we went bullish all week, so we expect a retracement. So maybe previous daily low too, you know. So here, this is where I was looking for the short. I've noticed this was taken. You know, you could also use this as a micro IRL to ARL model. You know, price comes up, fills the first presented fair value gap, again with these inefficiencies. You know, displacement leaves a lot of inefficiencies, fair value gaps. You know, price fills them. My entry was here, as you can see. Was the entry. I just left a limit order on the first presented fair value gap. My stop loss was here on the Fibonacci levels, because I know price should not, I mean, if we retrace deeper, we should not retrace more than the OTA itself, right? So this was pretty much my reasoning. I don't know if I confused you with this explanation. I'm just gonna go through it one more time. We have a high, previous weekly high. People are shorting here. Protective order is the buy stop, selling, buy stop, stop loss, right? Turtle soup manipulation. They are buying, they are selling to these buyers, right? And they are buying back what they have sold to these buyers, to these sellers. With what? The market did the order pairing with a low resistance liquidity run. Boom. Crazy move, displacement. Checking out this trend line liquidity. This move left inefficiencies, you know, fair value gaps inverted, first presented fair value gap. This was inefficiently made, because look, price just dropped like 200 points, like straight up down close candles, you know, like just one up close candle, you know, inefficient. Price comes up, fills this inefficiency. Again, key level, first presented fair value gap, replaced with a bullish fair value gap, replaced with a bearish fair value gap again. And this was a time of the manipulation too, you know, everything is calculated here. As you can see, it was also a CRT. I've made a video on CRT, by the way. Where is it? CRT, watch this video. So, open, high, 10 a.m. candle, right? Look, 10 a.m. So 10 a.m. open, high. I knew there will be a retracement, so I entered here. And again, target was here. Hit break even, a little drawdown, but eventually it delivered. You know. So this is how you frame a trade using low resistance liquidity runs. You know. And this is the execution. Again, this is on funding pips. So yeah, I hope you guys enjoyed this video. If you have any questions, DM me on the gram, and yeah, peace.